Are you making these 5 common financial mistakes? Stick around and I'll show you how to avoid these mistakes in 2025. 1. Not investing early, not taking advantage of opportunities early. Right. Now, inflation continues to grow, and that means delaying investment would mean missing opportunities and return. Now, as interest rates begin to stabilize across the world, it therefore means opportunities now abound in stocks and bonds. So you want to start investing early in blue chip companies. You want to start investing in bonds as well. So if you want to start, I would say go for S&P 500 to gain broad financial, broad market exposure. Next, allocate a portion of that to ETF for diversification. Next, the second mistake that people make is ignoring high interest debt. High interest debt or having high interest debt will mean you continue to wander in debt and you are unable to take advantage of opportunities. Okay, ignoring those high credit card debts in 2025 will hamper your ability to invest and grow. Some credit cards would have APR of about 25%. So what you want to do is to use the debt avalanche method and pay off your credit card or reduce those high interest bearing debt. Okay, you can also explore ways to refinance at lower rates or even transfer to zero introductory APR credit cards. A lot of them are bound, so you can do your research. Look for those ones that allow you to have 0% introductory APR, some for about a year, some for about 2 years. You can transfer your debt to any of these credit card platforms, and that will help you to reduce high interest bearing debt. That's the second point. Now, the third one is overspending without budget, right? A lot of people, I tell you, are in this. They overspend without a budget. Okay, so rising cost of essentials, housing, groceries in 2025 means you need to get a handle on your expenses. All right, and so you can achieve financial stability. Otherwise, you will continue in that cycle. All right, so lack of budgeting will prevent your ability to meet whether short-term or long-term goals. So my advice would be you need to budget. Okay, budget for everything that you want to spend. All right, and you can break it into 3. So you look at what your needs are, what your wants are, and then your savings. So my advice would be first, save before you spend. Most people make a mistake of spending before they save. So what you want to do in 2025 is to save first before you spend. All right, and you can break it down. 50% could go to your needs, 30% to your wants, and 20% to saving, 20% to savings. And then you can start from there and probably alter this proportion as you become confident with saving. So my advice this year will be don't spend without budgeting. All right, and you can spend set weekly spending limits on discretionary items so that you have or continue to have control over your spending. The fourth point is overlooking inflation in financial planning, right? Overlooking inflation in financial planning. So even with inflation moderating, the real value of your money continues to decline. For instance, the USD in the last 40 years have lost over 85%. Okay, so if you are the type that keeps your funds in the bank and then you earn some um, returns on your CDs or thereabout, you want to be mindful of this year, all right? You shouldn't overlook the impact of inflation in financial planning, okay? So you want to be aware of this. So what should you do in 2025? Invest in treasury inflation protected securities. That's an acronym for TIPS, okay? And that would help you to ensure that you have an inflation adjusted return. You also want to allocate parts of your funds or parts of your funds you have in your portfolio to real assets like real estate or commodities. Okay, and ensure that you have an emergency fund. An emergency fund should be about 3 to 6 months of your expenses, and then you factor in higher cost as we go. All right. You also want to be able to review or should review these plans as you move on. Then number 5 is not diversifying your investments. A lot of people just have an investment in one portfolio. It could be maybe bonds or stocks or cryptocurrencies, and that's 100% of their investment. You don't want to do that in 2025. Okay, so concentrating on a single asset class or stock would increase your risk. Okay, in case of market uncertainties. All right, so you want to avoid that. So what should you do in 2025? Allocate your investment to different asset classes: equities, bond, real estate, and other alternative assets. Use ETFs or mutual funds to achieve instant diversification. For instance, for equities, you could diversify across different industries: health, tech, energy, right? So you want to be able to diversify your investment across different sectors. Okay. Also look at opportunities in the global market. All right. So not focusing only in your local market. So look for opportunities elsewhere in the global market to ensure that your investment or your portfolio is properly diversified. Okay. So these are the 5 common mistakes that I want you to avoid in 2025. So which of these mistakes resonates with you most, right? Let me know in the comment section. Please don't forget to subscribe to this channel to learn more financial strategies to grow and protect your wealth in 2025. Thank you.